The U.S. Federal Reserve cut interest rates on Wednesday. However, Chair Jerome Powell signaled that future reductions would depend on further progress in lowering inflation. His cautious tone surprised markets, causing stocks to drop, bond yields to rise, and investors to revise expectations for rate cuts next year. "We're in a good place, but from here, it's a new phase," Powell said, emphasizing a need for caution. The Fed reduced its benchmark rate by 0.25%, but Powell highlighted mixed progress on inflation. While inflation has eased since its 2022 peak, some areas, like housing costs, have been slower to improve. Powell also acknowledged that the Fed is beginning to assess how President-elect Donald Trump's economic policies, such as tariffs, tax cuts, and immigration changes, might impact inflation and growth. Policymakers now project core inflation to remain above the 2% target through 2025, reflecting potential risks from Trump's agenda. Although the Fed has cut rates twice since September, Powell hinted at fewer reductions ahead, with the economy showing strong growth and low unemployment. Cleveland Fed President Beth Hammack dissented, preferring to keep rates steady. The Fed now forecasts only 2 small rate cuts by 2025, signaling a slower approach to easing policy as inflation remains stubborn. Powell acknowledged uncertainty surrounding Trump's policies, but stressed that the Fed is preparing for various scenarios. He added, "It's very premature to draw conclusions. We're discussing pathways and how tariffs might influence inflation." The Fed remains committed to balancing inflation control with economic stability.